The total value of all U.S. public companies is $40 trillion. The U.S. residential real estate market, on the other hand, is worth $43.5 trillion. Clearly, much of the country's wealth is concentrated in homes, making the real estate housing market the biggest asset class in the country and likely the world. With 65% of Americans identifying as homeowners, it's no wonder you are here today learning about the first step in the homeownership process, getting pre-approved for a mortgage. Hi everyone, Justin Campbell, a licensed real estate agent with eXp Realty. Today I'm going to walk you through the pre-approval process and what you'll need prior to getting started. Be sure to stay all the way to the end of the video where I will share with you the #1 home tip every buyer should know before reaching out to a lender to get pre-approved. In this video, we'll cover key factors to consider, starting with employment, credit, savings, and using 401k funds to buy a home. So let's dive in. Before we jump in this, I just want to clarify that every lender has different requirements for qualifications, and every situation is unique and/or different. The only person who can answer these really specific questions for you is a lender, so please keep that in mind as we move forward. Let's start with employment. The first step in the pre-approval process is you have to have a job. I mean, this is an obvious thing. I mean, how can you repay a mortgage if you don't have a job? Lenders are going to be looking for at least 2 years of work history. You do not have to work at the same company for the whole 2 years, but you have to be in the same trade or industry or position. For example, if 1 year you were a mason and the next year you're a clerk, you would only technically have 1 year of work history that you could use to apply for a mortgage. The verification the lender is going to be looking for you are 2 most recent tax returns and 2 of your most recent pay stubs. They may ask for a VOE or verification of employment. When lenders are qualifying you for a mortgage, they have a percentage of your available income that you could be used towards the debt. The industry average is 45% debt to income. This is an amount that figured as pre-tax, so it would be your gross income. So if you make $10,000 per month, 40% of that could go towards a mortgage or $4,500 unless you have additional debt. If you have a car payment and credit card payments and maybe some student loan payments, those monthly payments would reduce from the total amount that you could borrow. So let's say those payments are $2,000 monthly, you could qualify for a $2,500 mortgage. Keep in mind, this is the maximum amount in most cases and probably isn't the recommended amount unless you have a job where you anticipate that you plan on making more money year over year. Then you may feel comfortable going to this 45%. But if you don't and you only anticipate small cost of living raises every year, I recommend just nudging under the 45% to maybe 35 or 40% of your debt to income. How much money do you need to buy a home? I made another video going in depth in this, but part of the pre-approval process is the lender is going to ask you all kinds of financial questions. They're going to want to know how much you have in your 401k, how many stocks and investments, how much cash, and any value you may have in assets. From a financial perspective, my recommendation is to have at least about 3 months of reserves for your target mortgage. So for my previous example of a $2,500 mortgage, it would make sense to have about $7,500 in savings in case of an emergency. During the pre-approval process, have these bank statements and other financial documents available to provide to the lender for your pre-approval. If you can't document it, it did not happen. Every loan is going to have a different down payment amount. There are some zero down programs through subsidies. The Department of Veterans Affairs offers zero down programs, and FHA has some very low down payment programs available as well. Let's say the mortgage requires 3% down, then you would need 3% of the total purchase price available in cash, plus whatever closing costs you'd be paying out of pocket. Closing costs can be estimated around 2% of the total purchase price, so on a $300,000 mortgage with a 3% down payment and 2% closing costs, you would need approximately $15,000. Most loans will allow you to secure gift money towards your purchase. Just keep in mind the lender is going to want a document from the person who provided you those funds, assuring the bank that it isn't a loan. Let's say you have a mattress savings account and you want to use those funds to make a purchase. I would recommend talking to a lender prior to depositing those funds just to make sure you're going to be compliant with the lender requirements. Most banks are going to want those funds seasoned in an account for maybe a period of time of like 2 or 3 months. You can also use money from your 401k to purchase for a first-time home or other applicable retirement savings accounts. Keep in mind, in many cases, you will have to pay a penalty for early withdrawal, but in some cases, you may be be able to borrow the down payment from your 401k to cover the purchase of a new home. If you decide to sell a vehicle, maybe you've got an old Suburban in your driveway, it's worth like $15,000 and you'd like to use that towards purchasing a home. Again, verify with the lender. They may want a bill of sale or other document to verify that those funds are not borrowed. What type of credit score do you need to purchase? The minimum credit score needed for most mortgages typically around 620. However, a government-backed mortgage like an FHA loans typically have lower credit requirements than conventional fixed-rate loans and adjustable rate mortgages. I would recommend having a score around 700. There are lots of things that you can do to get your score to increase, but most important thing you can do is to continue to make your payments on time and pay down any revolving card balances. There are also concerns about late payments. Most lenders are not going to allow you to qualify for a mortgage if you've had more than 3 late payments in a 24-month period. Most credit card applications will allow you to quickly and easily check your credit score. Keep in mind this is not the same scoring system that the lenders use, but is a good tool to verify your credit. You can also get a free copy of your credit score by reaching out to one of the 3 credit bureaus. Prior to reaching out to a lender to get a pre-approval, it is recommended to have all these documents available, and that is to include your 2-year tax returns, 2 of your most recent paycheck stubs, 2 months of bank statements, and any accounts that have balances. This can really speed up the application process. Most pre-approvals happen online. You can also do it over the phone. Just really depends on what's going to work best for you. The online applications are really quick and easy, and if you have all these documents available and on your computer, you can get through a pre-approval in about 10 to 15 minutes. At the beginning of this video, I promised you one secret that every home buyer should know prior to get pre-approved, and that is to remove yourself from pre-screened offers or work with a lender that does a soft pull. When you apply for a credit approval, that information becomes public, and companies pay for this information, will send you letters and emails and phone calls to try to solicit you. If you remove yourself from pre-screened offers, you can prevent the dreaded junk mail and phone calls. Another option would be to work with a lender that does a soft pull, and in this case that notification will not go out and will prevent other companies from finding out that you're potentially interested in applying for a mortgage. I hope you found this video useful, and if you did, if you could just take a second and tickle that like button for me. If you're planning on transacting in the future, be sure to subscribe to the channel where we cover all real estate topics. Thanks for checking out today's video, and we'll see you in the next one.